Nigeria has also left its policy rate essentially unchanged, and that's happening for the third consecutive meeting. Nigeria's economy has taken quite the beating, essentially falling into its first recession in nearly 2.5 decades. The governor there, Godwin Emefiele, says inflation is accelerating. Despite that, the Monetary Policy Committee retained its benchmark policy rate at 14%. Nigeria's President Muhammadu Buhari proposed a 20% increase in this year's spending plans to stimulate growth and help the economy rebound after it probably contracted last year for the first time since 1991 by an estimated 1.5%, according to the IMF. Now, the lower prices and output of oil as well as shortages of foreign currency all contributed to the shrinkage of 1.5% last year.
However, considering the importance of price stability and being mindful of the limitations of monetary policy in influencing output and employment under the conditions of stagflation, committee decided unanimously in favor of retaining the current stance of monetary policy, thus keeping MPR at 14% alongside all other policy parameters.
All right, then let's put those rate-setting decisions into their proper context. Deji Badmus joins me now live from Lagos with more data on this particular story, especially on the Nigerian perspective. Deji, the finance minister had expressed her interest in having much lower interest rates across the entire financial system. But the vice president has also spoken of further reforms to the foreign exchange market as well. The thing is, though, what kind of reforms exactly does the government want to put in place?
Well, Rama, thank you very much. The problem is that the government has actually not disclosed the kind of reform it wants to see in place. What the vice president has actually said is that the government will do everything to bridge the gap now between the parallel market and the black market rate, which of course is very wide now, and everybody knows that is not healthy for the economy. But the government has not unfolded its plan as to the reforms it wants to put in place. And we all expected we were going to see the CBN, I mean the Monetary Policy Committee, now come out to say something about that. Well, that did not happen. We just have to wait and see. But there's no question at all that the government has said it is determined to carry out reforms in the forex market to ensure that that huge gap between the black market and the official exchange rate is bridged.
Indeed. The government revenue also deeply reduced last year, Deji, but with crude prices going and essentially holding steady above $50 a barrel, to what extent has that improved the state's revenue collection?
It has, Rama. It has. It has indeed. I'll give you a typical example. For instance, we know that with the marginal increase in the price of oil, Nigeria now earns more. And then you have the situation in the Niger Delta now calm. So production level has actually been ramped up. We have seen, for instance, the money shared between the federal government and the states, and including the local governments, for instance, in this very month actually increased as a result of the increase in the price of oil. And the CBN governor actually came out to say, well, that revenue collection has improved, and everyone is just hoping that it stays that way, and that you know, the price of oil continues to go up, and that if it continues that way, then revenue coming to the government will continue to go up, and that will have an effect in the forex situation in the country. We would begin to see that scarcity in forex now drop, and then we might see a situation where the naira, the value of the naira, will pick up, and you know, the forex challenge will begin to get addressed.
Indeed, although of course some would argue that that essentially produces an incentive for the government for the central bank to not make those required reforms in the currency market. We're now joined by Sumitra Naidu live from Johannesburg with a perspective on the ACRB's rate decision. Sumitra, that decision to hold rates, not much of a surprise on your end, was it?
No, not at all, Rama. In fact, there was, I think, 27 economists polled by Reuters, almost all of them saying that the Reserve Bank would keep rates on hold. Of course, there was, quite a move from the last MPC to this MPC. And by the end of last year, at that last MPC meeting, most economists had actually thought that the rate hiking cycle was over. But of course, a lot has changed since then. And of course, the economy still remains very weak. And that that remains a big concern for the Reserve Bank. So I think it was widely expected that the Reserve Bank would keep rates on hold this time around.
Indeed. Sumitra, imported inflation has always been a concern for South Africa with its reliance on fuel imports and a much stronger dollar, especially since early November. What's the outlook for the dollar-rand rate, at least in the first quarter of 2017?
Well, you know, Rama, rising oil prices is a big worry for South Africa, more particularly that food inflation outlook. A stronger rand is definitely a benefit, and while really unpredictable, the outlook in the short term is looking more positive. Surprisingly, the rand wasn't as negatively affected by the stronger dollar as it usually is. The governor narrowed it down to the decision by the ratings agencies not to downgrade South Africa. He noted that the rand showed a degree of resilience in light of developments in the US after the elections last year. He said the rand was reacting to better trade with higher commodity prices, improved capital flows to emerging economies, the bond markets also helping to lift sentiment, and foreigners were net buyers of South African bonds since the beginning of this year. So all of this playing into a stronger rand. The governor did warn, though, that global developments, Brexit and US politics in particular, are upside risks going forward. If Donald Trump has his way and weakens the dollar, that outlook, of course, will look definitely a lot rosier.
Indeed. Deji, let's come back to you. We're seeing a lot more Nigerians turning to virtual currencies, cryptocurrencies, as they're more commonly known, like Bitcoin, effectively to hedge against the continued erosion in value in the Naira. Why is the central bank, as a matter of policy, so hostile to cryptocurrencies, which, strictly speaking, under Nigerian law, aren't illegal?
Well, Rama, it will be difficult for me to describe the CBN as being hostile to the use of cryptocurrencies or virtual currencies, if you like. What we have seen, what has actually happened here is that there's no question at all that, you know, some Nigerians actually use it. And but of course, there are regulations. And what the CBN is basically saying is that those regulations, you know, that banks should ensure that those regulations are followed and that people should be very careful. And of course, the CBN decided to come out strongly against it after a local Ponzi scheme here started using Bitcoin, for instance, in paying some of its participants. I'm talking about MMM. And what the CBN actually says is that, look, virtual currencies are not they're not legal tenders in Nigeria, and that people should just be very careful in their use of virtual currencies. It's not as if the CBN is saying it's placed a blanket ban or something like that. People still use it. But basically what the CBN is saying is that people have to be very careful because, you know, these currencies, as you know, I mean, virtual currencies, as you know, it's not a legal tender in the country. And that even internationally, you know, that that users could actually suffer some kind of backlash, and that there are no protections at all. Mm-hmm. So basically what the CBN says is people just have to be very careful, and that it's not a legal tender in the country, and for those who are using it, to make sure that they comply with the laid down rules and regulations.
Indeed, caveat emptor, as it were. Thank you for that little bit of context around the multi-level marketing scam. One last question for you, Sumitra. Food inflation, that delivered the cake to CPI, driving it to 10-month high in December. With the worst of the drought in Southern Africa behind it, though, will food inflation moderate this year, or is it likely to remain at previous elevated levels?
A very hard kick, Rama. Food inflation came in at 12% in December, of course pushing that CPI number out to close to 7%. And, you know, even though the drought has been the main cause, as you say, the dry conditions have tapered off a bit. So that inflation figure took many by surprise. The Reserve Bank does expect food inflation to moderate, but not as fast as it previously thought it would. Rainfall patterns are improving, but the warning again from the central bank today was that while food inflation eases rises, it will take much longer to reach consumer level, and this is a big concern. Consumers are really feeling it. Meat prices in particular will lag and will go higher before they actually come down, because farmers now, of course, need to restock their herds. Going forward, oil prices and the rand remain risks, but the bank expects food inflation to average around 7% this year. So they do expect it to moderate, but much slower.
Indeed. We'll leave it there for the time being. Thank you both for your inputs. Sumitra Naidu live in Johannesburg, South Africa, and of course, Teja Badmus live in Lagos.